the companies that earn that money pay you that dividend. Some of them are banks, some of them are phone companies.
Crypto leader Celsius is about to run out of cash by October. Are they about to be saved? It appears that the cryptocurrency lender Celsius Network, which filed for bankruptcy in July, is in a far worse financial situation than was originally disclosed. According to the financial projections that were made public in a new court filing by Kirkland & Ellis, Celsius would be out of money by the month of October. So what is Celsius doing to avoid running out of cash? And what options does it have? Welcome back to Bitcoin Broadcast, one of the best channels for the latest trending cryptocurrency news. If you seek to be updated on what is currently happening in and out of the crypto world, this is the place to be. So how about you give this video a thumbs up and hit that subscribe button for more crypto-related news. And without further ado, let's get started. So, is it the end for Celsius? On Monday, the law firm Kirkland & Ellis, which Celsius has retained to handle its restructuring operations, filed revised financial estimates with the court, showing that the cryptocurrency lender will deplete its cash reserves by the end of October. The dossier also disclosed that the cryptocurrency lender owed depositors a total of $2.8 billion more in digital currency than it had in its possession at the time of the investigation. The document was presented to the court in preparation for an impending hearing. Unfortunately, Celsius's misery is a result of the impacts of the cryptocurrency crisis that occurred this year. This resulted in the suspension of withdrawals and the collapse of numerous lenders, exchanges, and investment organizations. In June, Celsius announced that the company would no longer accept withdrawals from any of its users, citing extreme market circumstances. But as we currently know, they were hiding something. Celsius said in a bankruptcy filing that it has paid off its debt to decentralized finance protocols. However, the company still has a hole in its balance sheet amounting to $1.2 billion because its commitments are more than its assets. The most recent statement from Celsius indicates that the company has cash on hand. However, it anticipates that it will no longer have any money available by the end of October. In the monthly cash flow projection that was done at the beginning of August, the firm disclosed that its starting cash position was greater than $130 million. The company anticipates incurring $137 million in operational expenditures and other charges over the next 3 months, including spending for restructuring activities, which will cause the balance to slip into the red in October. According to projections made by the corporation, by that point, it will have a liquidity deficit of $33.9 million. According to Brandon M. Hammer, an attorney with the firm Clearly Gottlieb, Steen & Hamilton, who talked with CoinDesk, Celsius may liquidate assets or acquire debtor-in-possession finance in order to raise money. Before they could take such a step, however, they would need the consent of the court, which requires giving notice and providing interested parties, such as customers and the creditors committee, with the opportunity to voice their objections. The letter disclosed that as of the 29th of July, Celsius owes customers over $6.6 billion in cryptocurrency, although the lender only had $3.3 billion in digital coin reserves in its possession. Hammer observed that the coin deficit seems to be significantly larger than the losses indicated in the first day disclosures. It's quite likely that the company had to liquidate assets at a loss in order to satisfy customer withdrawal requests prior to the implementation of the pause. And now you might be wondering, do they have anything left? According to Braziel, the Bitcoin hole is large, far more so than he had anticipated. Nevertheless, the company still retains control of the 410,000 staked Ether, a derivative token based on Ether, but the lender has $1 billion less in Ether in its possession than it owes to customers. As of right now, the holdings of USDC stablecoins are lacking a total of $666 million. According to the file that was made by Celsius, there are currently 658 million CEL tokens in circulation. CEL is the utility token for the network. Celsius owes its clients a total of 279 million tokens, which leaves the corporation with an excess of 379 million tokens. Because of the current short squeeze attempt that is being driven by social media for the token, the CEL net position is worth about $1 billion at current market levels. This is more than twice as much as what is mentioned in the document. The increase in prices, on the other hand, doesn't help the company solve the issue that has been plaguing its balance sheet. The majority of the token supply has been hoarded by the platform, and there's only a limited amount of liquidity available on exchanges. If the firm attempted to sell CEL in order to fill out a portion of the shortfall on its balance sheet, prices are likely to see a precipitous decline. Actually, according to Braziel, the asset side of the CEL holding is probably worth nothing. However, the liabilities are still present, since it is possible that the holders of CEL tokens would seek to sue Celsius and demand $1 for each token they own. During the process of the firm's bankruptcy, the mining activities of cryptocurrency lender Celsius have been a touchy subject. Yet the company has been granted authorization to mine and sell Bitcoin in order to support its operations. Celsius's mining firm is expected to play a big part in the company's reorganization, and as a result, Celsius has been given permission to spend $5.2 million on infrastructure and imports for the mining sector. Only half of the 80,850 pieces of Bitcoin mining hardware that Celsius possesses are really being utilized by the company. But is this profitable to the company? A document reveals that as of July 13th, the company was mining an average of 14.2 Bitcoin per day, which corresponds to around $341,634 in value. It forecasts that it will produce 10,118 Bitcoin this year and 15,000 Bitcoin the year after that. However, mining Bitcoin is often impacted by the volatility of the cryptocurrency, and as a result, it's not always profitable. Before filing into bankruptcy this year, Celsius had planned to bring the total number of mining rigs it operated up to 120,000. Bitcoin mining profits have in the past been used to settle an intercompany debt owed to the parent company and provide funding for ongoing business activities. The ongoing legal action is making Celsius's already difficult financial situation even more difficult. During this interim period, the circumstances underlying the filing for bankruptcy made by the Bitcoin broker are becoming more transparent. According to Financial Times experts, Celsius founder and CEO Alex Mashinsky took control of the company's trading strategy before a meeting with the Federal Reserve. The prices of the cryptocurrencies that are now the most popular have recently experienced significant drops from their all-time highs. Mashinsky personally overruled executives with decades of experience in the financial industry to arrange Bitcoin trades in the days leading up to the Fed meeting. In one incident, it seems that the CEO of Celsius gave the order to sell Bitcoin with a value of hundreds of millions of dollars without first validating the information provided by the firm on its own holdings. At that time, the cryptocurrency broker was keeping Bitcoin assets with a total value of $22 billion for the benefit of its customers. The next day, it was discovered that it had incurred loss due to the acquisition of all that Bitcoin. And that's a wrap. What did you think about the current situation Celsius is facing? And do you think it's going to avoid running out of money? Comment below. Let's interact. Also, please leave a like and subscribe. And don't forget to turn on the notification bell for more amazing cryptocurrency news.